Welcome to this week's RE Ideal Breakdown. I am Greg Helbeck, and I'm going to tell you about something that most house flippers and even landlords don't understand, and this is what screws their numbers up. So today I'm going to talk about soft costs. What are soft costs? How do you account for them? How do they vary state to state? And how do you accurately, assess these numbers so you can still make your projects make sense and still make a bunch of money? So people want to get into real estate investing. That's not a secret. People want to be in this business. They want to make money. They want to flip houses. They might want to wholesale. And this is applicable too if you're wholesaling, because if you're selling your deal to somebody, you need to know the soft costs so that the deal still makes sense for a buyer. And even if you're doing rental property investing, soft costs is a big thing. So first of all, let's define what that is. Soft costs are anything that is not directly associated with the construction of the project. So for example, a hard cost, which is the opposite of a soft cost, is like construction, right? So how much does it cost to do the kitchen? How much does it cost to do the bathroom? How much does it cost to do the floors, etc.? So construction costs are hard costs because you're literally spending money on hard labor and material, and it's directly adding value to the property, right? That's a hard cost. Now, a soft cost is anything that's not construction related, but it could be sort of construction related, if you know what I'm saying. So like an example would be like permits would be soft costs. Obviously, you need a permit usually to do a deal. So that's a soft cost that's directly associated with the hard cost, right? Another soft cost would be closing costs, right? And that's a whole nother video I can make. But, closing costs when you buy and then closing costs when you sell, those are soft costs. Another soft cost would be commissions, paying out a commission to a realtor when you sell your property. Another soft cost could be your title charges, right? What is the attorney going to charge you to do the transaction? What would the title company charge you? What does the escrow company? It depends on what state you're in. These costs can vary. Another cost that is, pretty common in most places is called a transfer tax or an excise tax in Washington. This is basically a fee you got to pay the state in order to transfer real property. So you need to understand as a flipper, what are your soft costs going to be? Another big one is the cost of capital. How much is it going to cost you to borrow the money if you're borrowing money for your project? You have to account for all this, right? Because I see a lot of people watch a flipping TV show and they see someone buy a property for 500 grand. They see someone put 100 grand of construction in, so they're all in for 6, and then they go sell it for 7, right? And they think they made 100 grand. Obviously, they made much less than that. If you understand soft costs, you're probably going to make best case 650. If you're in the state of Washington or New York, you're probably making less because it's really expensive with the soft cost. So there's that line item of a soft cost that people don't account for. And today I'm going to talk about how do you accurately assess this for your project. So first things first, it depends on the state you're in, right? If you're in Washington State or New York, where I operate, or even Delaware, the soft costs are high. And the reason they're high is because in all of these states, we have higher sales prices, which means that the realty commissions are going to be higher because, 3-5% of 500 grand is a lot more than 3-5% of 200 grand. So we have higher commissions we have to pay. Second thing we have, depending on the state now, either escrow fees or attorney fees. So like in Washington State, you got to pay an escrow fee, which is a fee to the escrow company for them to facilitate the transaction. And, I get a good deal because I do a lot of volume here, but the typical escrow fee is like $1,200, right? In New York, you got to pay an attorney. That's going to be anywhere from $1,000 to $2,000. So you got these fees right off the bat. You got the higher commissions. And then you got the transfer tax. Now, this is where it's a big deal in Delaware. So Delaware, it's 4% transfer tax, which means that if you sell a house for 200 grand, it's $8,000 in transfer tax. Now, usually that gets split between the buyer and the seller. But if you're buying a property off market, you're paying all the closing costs, including the transfer tax, and you're paying 200 grand for someone's property in Delaware, you're really paying 208 grand because you're paying their transfer tax. So that's a big expense, right? That's almost $10,000 just in transfer tax. That's not even accounting other closing costs and, whatever the case might be. Washington, it's a sliding scale. It's usually like 1.356% on properties that are like under 800K. And then if they're above 800K, it just goes higher. New York, it's pretty standard. It's $4 per thousand. So it's 0.004%, which is cheap compared to Washington and Delaware. But these are costs that you're paying right off the bat the second you own that property after the closing. Now, another thing with the soft costs, and this is where, you really got to have a good construction system, is you're borrowing money to rehab a house, whether you're renting it or selling it, doesn't matter. Every day you own that house, it costs you more money. It's like you pay daily interest with hard money or even private money. There's daily interest, right? So every second you don't have that house sold or refinanced, it's going to cost you more money. So usually when you're borrowing hard money, you're going to pay like 1 or 2 points, which is 1 or 2% of the loan you borrowed up front. And then you're usually paying 10 to 12% interest annually prorated, which means the longer you have the money, the more interest you're going to pay. The shorter you have the money, the less interest you're going to pay because it's just prorated, right? It's just like per diem. So if you don't know what you're doing and you're rehabbing a house that should have taken a month to rehab and it ends up taking you 3 months to rehab, now you're paying an extra 2 months of hard money to just get the project done. And then you got to wait to sell it, which could take another 2 or 3 months. So you have to understand the quicker you can rehab these houses, the more money you're going to save on the soft costs and the more profit you're going to make when you sell it. So those are the big ones. It's closing costs, which consist of title and escrow fees and attorney fees, transfer tax, and then usually you pay your insurance premium up front, which, is very common. And then you got to pay your realtor commissions on the back end. So like, let's say you're selling a property in Washington State for $700,000. You're paying a 5% commission. 35 grand is getting taken right off the top when you go sell that property. So you got to have a good margin there. And New York's expensive too. Same with Delaware. You're going to pay usually, 5% realty fee. And that's something you got to account for when you sell the property. And then obviously the last, main soft cost is the interest, right? So the interest you're paying on the money you borrow. So if you pay cash for a property, you save a lot of money because you don't have as much closing costs because there's most likely no mortgage recording tax. You're not paying interest. But the drawback is it's all your money, right? So you only have so much money to do every deal. So a lot of times people borrow. So those are the three big ones. To give you a good rule of thumb, because I know I just went into the weeds with all this, to give you a general idea on what the average total soft costs are when you take everything into account on a moderate rehab project that's not too long, anywhere state dependent from $45,000 to $65,000. And this is assuming the property is selling for above $350,000, right? Because that's pretty common in all those areas. So I'm just going to tell you my markets: Washington State, New York, and Delaware. Very similar in terms of the closing costs and soft costs. Anywhere from $45,000 on the low end to $65,000 on the high end is what my soft costs are total per project. So I need to assume I'm buying a house for a certain number. I'm going to put a certain number of construction into it. I'm going to have 45 to 65 grand of soft costs. So those three numbers added up are my basis, aka my break even. And then obviously I want to sell it for a profit. So I need to assume that it's going to sell for more, which I need to, obviously look at that via comps and, realtors and whatnot. And I got to make sure I got to take that sales price minus my all-in cost and make sure there's a good margin there for me to have it be worth my time. So that's the rule of thumb in my areas. That's how they work. That's what they comprise of. Now, if you're in the South, if you're in a state where there's no transfer tax, if you're somewhere different than where I am, it's obviously going to be lower. If the sales price is really low and there's no transfer tax, your soft costs aren't going to be anywhere near that, right? But I'm just giving you my numbers in my areas so you can take them and look into your areas and see what they are. If you got value from this, do me a favor, like the video, subscribe to the video. If you are in one of those areas I mentioned, New York, Delaware, Washington, and you have a house you want to wholesale to me, I'll pay all your closing costs. Surprise, surprise. I'll pay the soft costs at closing. So send me an email if you have any deals, greg@velocityhousebuyers.com or grego37 on Instagram, and I'll see you on the next REI weekly lesson. Take care.